YouTube. Listen, fam, if you made money today, let me know down in the comments below. If you're ready to make some money to close out the week, make sure you watch this video all the way to the end. As always, guys, please make sure you like and subscribe. Help this video get at least 1,000 likes. And without further ado, let's get in our bag, man. Listen, I got APLD pulled up. If you have made money at any point in time with us along the way with APLD, please make some noise down in the comments below. Listen, guys, today this one was up pretty nice. I love to see this, man. And if you've been around and has been in this since we first got this till now, I want to say major salute. I already know you cooking. I already know how we put it down. And just know Coach couldn't be more proud of you guys on the journey, okay? That's what it's about. Now, listen, today was a great lesson on buy the rumor, sell the news, okay? Did you guys see us hit all-time highs in the S&P 500, aka SPY? Did you guys see Tesla hit 470 and then fall $30 down to 430?
Sell the news.
And so that's called buying the rumor, selling the news, okay? They sold and locked in profit, which is something I want to make sure you guys are doing as well on the journey, especially if you're up. What else Coach got for you? Coin. If Coinbase has done right by you, if you made money this week or at any point in time with Coinbase, please let me know down in the comments below. Guys, Coinbase has, today was a record day, but hey, I don't even care about today. All this week, Coinbase was cooking. I told you guys, I covered this in yesterday's video, and guys, it's up another $25 from what I talked about yesterday. And yesterday it was up big from the day before. Does that make sense? So listen, man, that's why I say there's a bull market somewhere, and what I'm trying to teach you guys how to do is know how to fish for yourself. So I knew when they said the government was going to shut down, I'm looking like, ooh, let me make sure I put a few plays on the same game's radar, a few plays in a money team, just so you guys can cook and know how to have the right guidance and what to do. Okay, shout out and major salute. If you got busy this week with Coinbase, just know Coach is extremely proud of you. I want to say major salute for this one. This one is HUD, ticker symbol.
Salute to the YouTube subs.
This is a money team play this week as well. This one,
see your guys' comments
up
when they come in.
On today's up huge for the week. Shout out to everybody, man.
All right, let's jump into a little breakdown here.
This is the beauty, what you guys are having a chance to experience. This is what investing is all about. This is what the power of buying assets is all about. When you guys can see
small cap still pumping.
I told you, our bag is deep. And I like to show you guys, like, man, it ain't just a one-off.
Open, holding in there.
Only one stock can do good. No, if you know how to read a chart, the money is in the chart, okay? If you know and learn how to read a chart, you can spot what plays you need to be in. But listen, none of that matters if you guys are not protecting your capital. None of that matters if you let green turn red. None of that matters if you don't use a stop loss and properly manage your risk, okay? And so again, Coach has to reiterate these things because it's all good when the bull market is doing what the bull market do. But are you going to be ready for buy the rumor, sell the news events? Are you going to be ready for the sudden change,
show, girl.
The rug pulls,
Release
or when the trick trapped in?
All right, let's get cooking here. QS is looking good. Yeah, it's definitely cooking. I don't know if you can buy it at this point. But I could be wrong. It's definitely holding up serious relative strength relative to SPY, which is down a little bit. QS, that's batteries, right? Believe that's batteries. See if we can do dual LLMs here. Claude is a little slower, not only latency-wise, but also getting to the point-wise. AMPX maybe? SLDP? LAC is kind of related. It's also just dubious. QS is getting some contracts, the rumor is. That's interesting. That's a few days ago. Collaboration with Corning, that's a big company to develop manufacturing capabilities. Okay, so SLDP kind of don't love how this low is, but definitely looks strong. And then what was the other one? This one looks a little similar to QS. All right, let's get into possible production. I don't know what possible production, like kind of like Tesla's delivery numbers, like battery numbers for QS. Definitely see this agreement. What else do we got here? Too much noise. It looks interesting. I'm going to focus on one that's not broken out yet. Now, of course, this may not hold, but looks okay so far. Jump in a little breakdown here. Thanks for the questions on YouTube, comments, updates. Appreciate it. Love it. There's one stock that is about to break out. It is a real estate technology company. It has gone up about 100% or more just in the past month. Dropped a little bit and now it's basing, looking like it can jump back up. There is a small scale public figure, Eric Jackson, talking about this stock a lot. He is technically a hedge fund manager. The stock is Open Door, OPEN is the ticker, and let's jump into what the company looks like fundamentally and visually on the chart in terms of actual buys and sells recently.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. Loud and proud. Here is the Open Door pivot level. Now, the question becomes, is this going to hold? Because, yeah, today's wick looks a little gnarly, but look, there was a wick like that a couple days ago as well. So I don't like to get too engrossed in the day to day, but it is notable to say that SPY pulled back a little bit today and Open Door is still holding. And you can see on some other companies, they are also pulling back today. So it's not too worrisome to see a company that's sort of holding like BE might be, or in our case, Open Door, that's called relative strength. And similar tickers to Open Door we'll look at, but what I like about this company right now is, yes, it went on a crazy run, but there is some positive to that. It's on everybody's radar, for one. It did this before where it went up 100%. That's 400%. The percents get crazy, so it's easier just to say it went from basically 1 to 4, back to 2, up to 10, back to 6, up to, so you see what's happening here. It is speculative, but it's holding up, and so there's a lot of interest in it. And as volume dries up, there can be breakups to the upside. And now the question becomes, can you get in here with low risk? And that's kind of the whole point of a line here, is you can risk one of these prior days. And yeah, the markets are dumping, but Open Door is not. So those are the opportunities you want to be in. And we can look at the 10-year, which is up a little bit. We can look at the dollar, it's down a little bit. We can look at oil, up a little bit. We can look at gold. Well, we'll just look at KGC, but that's up a little bit as well. Gold is almost trading like a meme at this point instead of a safe haven. IWM, the small caps, up today, also known as the Russell. So Open Door is a small cap. You could say it has relative weakness to the small cap index. That's notable as well, if you want to be careful. This is where it's at. The level is pretty clear. And if we look on a 5-year chart, of course, there is no 5-year chart because this is an IPO that just drifted down and then had a bunch of volume come into it. But here's the deal. This is Open Door. It is got Keith Raboy, chairman of the board. He's sort of infamous in Silicon Valley, Miami. You got this Kaz, former Shopify COO, who is talking aggressively, which is what you want to see for a company like this. This is also aggressive, 1,400 to 200 employees. This is sort of the borderline insane Silicon Valley rhetoric that makes you excited about a $4 stock. And look, here's the deal. You want to be careful. They do have revenue. They did sell thousands of homes. They do have a net loss that's expected for a penny stock, aka a startup that's publicly traded. And now the question is, are there going to be headwinds? We did have rate cuts, but they were baked in. Rate cuts are very important for real estate, even real estate technology companies. It's not totally crystal clear what their technology offering is, aside from if you're not making more money with them than with a real estate agent, then they really have no offering at all, unless it's selling your home quicker. It's not completely clear to me that they've demonstrated that their value proposition is 10 times better than the existing offerings. This is going to happen. This is all part of this Silicon Valley game. And now the question is, what's going to happen if they cut a bunch of employees? And are they going to be able to keep up with not just their competitors, but also with the hype? This is the big talker right now. His name is Eric Jackson. He has been trumpeting Open Door. He says it's his largest position. So it's kind of a unique situation because Open Door could obviously not be a fund's largest position for almost all funds with a public presence because there's so few dollars traded. There is a lot in the sense of a single person with their single account buying it. But if this is $8 billion traded, this is the most. Maybe you put 100 million in it. I think even 100 million would be a dangerous amount of money to put in a stock like this. If the volume dries up again, you're high and dry, or liquidity trapped. And if you look down here, it was trading 100 million. You can't get out on a day like that. You might move this stock 40% or more down, which means you lose 40 of your 100 million, which is absolutely insane. So I guess this is our guy, Jackson. It's his largest position. We'll see what happens. He has insane Cathie Wood type price targets, and he wants this to be the next Palantir. Okay? Who doesn't want it to be the next Palantir? Fortunately, I don't advocate investing like that. So on this channel, we don't have to worry about that. All we have to say is, can we get a 10% push out of this? Which is not a lot on a stock of this dollar value. And maybe if you get chopped out, you lose 1% or 2%. If you don't get chopped out, maybe you get the move, maybe you sell half, maybe it does dip down again, maybe you even get a smaller move like this, and you have to sell out of your position and you're still up from where you entered. That's the name of the game, in my opinion. We're not trying to get the next run to 20, although that could happen. You might have a third half your position still in on a move to 20, but I'm not Eric Jackson. I don't think a lot of people want to really rally behind this guy unless you are literally on the board or have stock in Open Door that's private stock or yet to vest. Or I'm not here to tell employees what I think Open Door is going to happen. For people who haven't taken a position in Open Door yet, the opportunity is this. It's a tight candle here where this entire candle is only about 5%, okay, which is a lot. The average range of this stock is 12% over the last week and a half. Well, 10 days is really more like 2 weeks business day wise. But if this candle's 5% and you risk a couple percent, a few percent, maybe a more, let's say, example time, let's say you have a $500,000 account and you want to put 5% in Open Door, okay? So that's $25K in this stock. And you risk, say, 5% of that, you're risking $1,250. 5% of that is about the width, the length of this candle, okay, the height of this candle, whatever you want to call it, from top to bottom. 5%, just about. Of course, if you get your 10% move, you're up $2,500. And if you sell half, and then you'd be up $1,250. And then if you hold for another 10% up to $10, say, so you don't even have to risk it going through $10, which is a whole dollar level. A lot of people are going to be looking at that $10 level. You can see it actually sold down on that level. So maybe you get out even before that. You sell your other half. You get 10% additional on that half. So that's a $2,500 move. You're up $2,500 plus $1,250. I don't do public math, but that's what, $3,750. So that's a solid gain for a 500K account on a tiny stock, which you don't even have to believe in the Open Door vision. You just see an opportunity to make a gain. So that's a little example. And this is the other Sympathy offer pad that's publicly traded. Of course, there is Zillow, but when we look at OfferPad, this is the chart, okay, didn't really go. Definitely laggard. Maybe you can buy it here with a really tight risk, but I would want this to sort of start to turn up before that happens. So Open Door's the better move. Zillow's not looking great. IWM is looking good, the small cap index, which does well with rate cuts doing well. Real estate companies do well with rate cuts doing well. That's the play. Those are the risk levels. Probably here, which is a high volume day, which you can see that high volume extending out to this indication here of the volume. You can see there's not much volume here, meaning on this particular day, most of the volume, when combined with all these other days, is up here. I don't really know on that particular day how much was traded. I'm just trying to articulate where to set your stop. Here is probably too far, and if you set it down here, you're only really getting the volume from this day and these days. That's what I'm trying to say. So it could go right through here, whereas you have support all the way down here, you have support up here, kind of have support down to here. And what I'm saying is that there was a bunch of shares traded there. So as long as the price is above those shares, above the people who bought here, who bought this capitulation drop, and it started to move the upside, people who bought here, as long as the price is above that level, those people are still making money. So they're unlikely to sell their shares because they're happy. Once it goes below, there could be another down move like this. So that's the level. If you like these sort of videos, hit that subscribe button. You'll get notified of a new video. It's only 3 notifications a day, even if there's more videos. If you want to have a Q&A environment, head over to stockscommunity.com. It's $25 for 7 days. You can ask anything you want. And there is a weekly course member live stream in that community for people who join, even if you just joined with the $25 welcome offer. So I think it's an all right deal. And if you like this video, like it. I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into some Chris Sane.
And frustrate crew are attacking you. Okay, that's what I'll try to prepare you guys for, because the money part is what I do. Okay, I retired young. I've been in my bag for a long time. I know the power of investing, and I definitely know the power of trading. Okay, but it takes discipline. Okay, you can't just go at it willy-nilly. So that's why I need you guys to lock in. I need you guys to have your A game when you show up with Coach, okay? So listen, Circle.
NBIS is up a lot.
CRCL is the ticker for Circle. Now this went crazy today. This has been on my honorable mention list for the money team. Okay, this was a money team play, but it didn't make the money team this week. We chose Hood over this. But nevertheless, if you made money with this as well, I want to say major salute. Okay, guys, I want you to go out and find your place. Everything don't gotta be something I recommend. There's some things off of your own due diligence, off of other spaces you guys might be occupying in, that you will come across and hear a different plays yourself. And that's okay. Long as you are cooking, just know I'm proud of you. Long as you are winning, just know I'm proud of you. But what I care about more than all of that is no matter if you choose one of my plays or not, if you follow the principle, protect your capital, manage your risks, use your stop loss, don't overstay your welcome, don't get greedy. All of that stuff is what I care about no matter what play you go and do, okay? Because if you do that, then I know you on to a good start. Now listen to this before I get you guys up out of here. I got a $50 play for you guys that
This
I
one's
can't have you
interesting.
missing the big plays, okay? These plays are
I guess
doing
this
good,
is the
have done good, and continue to do good.
beauty
But
of
right
a smaller stock versus an
BMNR,
oracle
okay, Bitmine emerging technology.
after a
This
big
is our
move.
Ethereum
But
ETF, okay, and I need you to
I think
understand
QURE is still
deck.
interesting
They
too.
got next, okay, and so 60. This been coming down to 30 to
CLPT
40. You need to be buying on pullbacks,
was it
dollar cost
Sympathy?
averaging here, and then understanding that it's making this way to 60. On 60, we looking to go attack 100, but I want you to focus on one target at a time. We got to recapture 60 first. You can't get to the finish line if you don't first clear this hurdle. You got to get above this hurdle so that you can boom run the rest of the race. You got to get above this hurdle so you can boom run the rest of the race, okay? You can't just, without getting over this, you can't get there. So again, we got a $60 target short term, because again, I still feel like we want to go with the trend, okay? You want to go with the trend, but the market is also showing signs that it's just due for a pullback. And when you've been in it enough, you just know the vibes, okay? You get that feeling, you kind of know. So like what they did with Tesla today was a good example of how they can do the rest of the market, or at least the QQQ and the SPY, aka the S&P 500. Okay, so again, not that it's coming. You stay the course. The trend is up. So on pullbacks, you get in low so you can just go up. It's called a melt up, okay? It ain't gonna go crazy. But if you can get the SPY at 666 and take it to 670, boom, that's a good day. If you can get it at 667 and take it to
All right, let's focus on some
671,
smaller names
that's how
like
you wanna do it.
QURE
Okay, don't
here.
try to short the market. Not yet, even though it feel like it's on shaky ground, okay? So listen, man, job well done across the board, but I need to make sure, and I was talking on a coaching call today, Doris, if you happen to see this, I want to say major salute to shout out our coaching call, shout out to everybody I talked to today, but I was asking her, like, man, how could I better prepare you guys? Like, what should the video titles be when I need to stress the importance of, like, using your stop loss, or that the market is going to come down, or your stock is going to come down, and protect your profits? Or do you guys just want me to keep echoing it in every video? Like, hey, put your stop loss on. Matter of fact, that's what we're going to do until I figure out how I want to go about this. Everybody go to your play. If you're up 40%, 60%, if you're up 20%,
I'm continuing to play this part because it's important right now.
Go to that specific play and do me a favor. Place your stop loss on it. Okay, so like if you're average
100%. The market's been crazy the past few weeks. I'm not saying to short the SPY. Shorts get run over all the time when they short the market as a whole. But if you're not taking some profits, you're crazy. So let's talk about QURE, and it's Sympathy, which is another ticker that is similar to it, that also ran. Here we go. Jump into a little breakdown. If you are hopping in on YouTube, I can see those comments come in. So that is a way to ask questions. Putting the phone on low battery mode here. And let's get going. There's one stock that is about to go up, in my opinion. They did come out with a breakthrough scientific result on Huntington's disease. I'm not going to say they found the cure for Huntington's disease because I'm not a doctor and I don't think they would say that. Nonetheless, this stock is up a ton already, and biotech stocks are a particular type of stock where just because it's up a ton, it doesn't mean it can't go up a lot more, because their moves are so based around huge trial results. The drug either works or it flops. And it looks like this company has something that works. I'll show you how to be careful if you choose to get into this stock, because the trial results can also kill a biotech stock, but the ticker is QURE. That is the Huntington's disease stock that made all these other stocks that are similar start to get some buying. And let's jump into what the stock looks like fundamentally, as well as what it looks like on the chart. And if you like these ideas, hit that like button.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is some info about this breakthrough, okay? Its experimental gene therapy achieves strong efficacy in a pivotal phase 1 or 2 trial for Huntington's disease. That's a mouthful, but a lot of people think this is very helpful in potentially curing Huntington's disease. Their high-dose arm showed 75% slowing of disease progression at 36 months. That seems pretty important. 75% slowing. I'm not going to parse this like I'm on the team that interpreted these results, but I'm just here to say the stock went up a lot in response to this trial data. So biotech experts were very excited by this result, and now we just have to see if the stock can stay up there. There is some dilution risk, but there's always risk with biotech stocks because a new trial result can come out and you can have a move down like what happened with HIMSS here overnight. Now, here is the chart. We're up more than double, okay? And one way to play a move like this is to say, hey, a lot of volume traded on this day. A lot of people bought the stock. That's what's happening. And you can see that over here on this blue blob. There's a lot of people who bought in here and here. This blue blob doesn't actually take into account at what point during the day they bought. Obviously, I understand that now that I see that this is the same width through this entire day. But it does take into account what we can visually see on this chart down here, which is a bunch of people bought on this day. So you can use this as a risk level. And a lot of people who bought here, who were investors and have a trading mindset, probably did that and said, hey, if it gets below this level, I'm going to sell because I know that a lot of other people are also going to sell and the stock seems to be going down. You don't have to wait for it to go down to here or even lower to sell out. This is a good stop level right here because there's so many people who are making money as long as it's above this level. Once it starts to get down here, a bunch of these people are no longer making money. And I know what it feels like. You know what it feels like when you're not making money on a stock, you sell it. And that is a cascading effect. And you can have moves like open door on this day. People just start to sell, and suddenly this is a 20-30% drop in just a couple days. Whatever that actually was. My tool is a little bit covered by up here, but we can pretty clearly see that there could easily be a drop of 20% or more. Now, I'm not here to scare you. Otherwise, I wouldn't have picked this stock. I think this has upwards potential. And there is a similar stock, CLPT, that had a similar move. This is the 24th. This is the 24th. And I think this could move up just like CLPT moved. I don't know when it's going to move up, but I do know that when you have these extremely compressed or tight, whatever word you want to use, sometimes I say compressed because tight is whatever. I guess tight is not super applicable to words you should say. It doesn't matter. It's compressed days, and I'll say whatever you want here. Let me know in the comments what to say. You don't have to risk much money is what I'm trying to say, and you can make a lot because if you buy on this day, right, you didn't know this was going to go up, whatever it is, 10%. But if you risked just $1 or a few dollars, really, because if we're being honest, if we look at this day, this is on September 29th. If we're being honest here, I think this is the high of 62. So that was pretty much here. So yeah, here we go. This day. If you bought on this day, it actually did go down a little bit to start. Sorry, this is looks like some sort of video game here. We got to zoom out a little bit. There we go. That's perfect. The gray is the after hours, so that's 8 p.m. to 4 a.m. And then the white is 9:30 a.m. to the after hours is it's confusing even to me. And I've looked at this chart a lot. This is actually my chart, obviously. This is my software setup. If you want this software setup, you can just ask me. InStocksCommunity.com would be the best place to ask me. I have been checking YouTube comments in order to raise my voice, for example, and make adjustments I can to make these videos better for you guys. But if you are in Stocks Community, you can ask me and I can give you this setup. So how it works is I just share the setup. So I just share my workspace like this. And then, that's my workspace today as of October 3rd. But I don't change it. I haven't changed it in months, if not longer. So I would just call it, Sam's. And I'll just share it with you. And I'll just pop that in the community. But back to what's going on here. This is 4 p.m. This is 9:30 a.m. And the markets don't open in most cases, between 8 p.m. and 4 a.m. There is some stocks, QURE may or may not be, depending on the exchange trading during that time. Almost every person, including me, doesn't have to worry about what happens overnight. Almost all the time. I'm talking about this so much because let's take a look at HIMS, okay? And let's take a look at this day. So this day is June 23rd. So if we go to June 23rd on this software, I'll go to June 24th so we can look a day back, and we'll look on a 5-minute chart here. Wow, right? That is scary, having to sell out here. And if we look to a chart that includes the after hours and the pre-market, you can see that if you are seeing on your phone or on your broker on your computer, or I guess those are the only two places. It would be on your phone. I don't think many brokers send notifications to your email, but what you see is that I'll put this on a 1 minute now to really zoom in. Don't worry, this is not a day trading training, but this is an example of there are special situations where, we actually can't do 1 minute because it's a few months behind. So this software doesn't have the data. I believe that's what's going on. So I'm just going to open this up to reload that for a second. All I did was clicked on this button twice. There are situations where, as this loads, if you're at your phone or your computer, you can sell out of a position before 9:30 a.m. and save yourself some money. I'm not saying that's what you want to be doing or that you need to be that vigilant and aware. In almost all situations, you don't. But I am saying, let's see if we get this to load. What the heck is going on here? Sometimes this does happen. If you see the stock going down and you're at your computer or at your phone, you can sell out. And HIMS went from $60 to $45, which is absolutely terrifying if you have a huge position, like say 30% of your portfolio. I never would recommend putting that much in a stock. I don't think that's a good idea. I do know that some extremely aggressive and extremely good investors do that. So it's not super insane for me to talk about someone having a 30% position in one stock, because I know that some of the people who do that are really good. Now, I'm not saying they're watching this video. I'm just saying there are some lessons you can take from people like that. And this is the lesson, which is that if you are at your computer, and this is at 7:45 a.m. Eastern, you get out here, you only lose $10 a share instead of $20 a share. Okay? And that's a big deal. If you have a 500K account and you put 30% of your position in here, let's just say it's 200K. Let's say you're really aggressive. It's 40%, I guess. And if you have a $200,000 position in this and you go down, whatever it is, 10%, you lost 20K. Whereas if you go down 20%, you lost 40,000. So that's why people start to pay attention to their phone at 7 a.m. Again, this happened at 7:30 a.m. And I'm not saying you have to look at your phone all the time or your broker all the time. I'm just saying if you check, you wake up at 7 a.m., and maybe you check at 8 a.m., an hour later, you're cooking breakfast, or you're on the way to work, or you're at work, or you're busy with whatever you're up to, you still saved yourself an extra 10 grand. So this is a long lesson that is about HIMS more than QURE, but QURE is definitely a great opportunity, and it's also a biotech. So this lesson is very, very applicable. So with all that said, here are the levels. 53.50 is a pretty important level today, yesterday, the day before, and then Monday And going back to last week, so you risk $1 or $2, make 10 to get above this high, make 20 with another half your position or a third of your position if you still have a third left. That's the idea. And this is the Sympathy ticker that went some more. That sort of represents what could happen for QURE. There is some dilution risk, which means they could sell shares into the market, which will push the stock down. So those are the risks. Sometimes I'm more vocal about the risks than the positives, and that's by design. But here's the deal, okay? You can see trial dates. This is the most important upcoming date. Is you don't want to hold this into November 4th. Okay, it's October 3rd right now. If you do hold it, you don't want to hold the whole position into earnings, because who knows what can happen on earnings. But this is the other company to take a look at. CLPT is that company. And we looked at that chart. So I'm not a biotech expert, but CLPT is the company that is moving with QURE. And those are the levels for QURE. If you like these ideas, if you like this example of how to be careful with stocks, let me know in the comments what you like or what can use improvement. And if you want to ask questions about your stocks or about what stocks to look at more closely, head over to stockscommunity.com. You can try it out for $25 for 7 days. If you haven't hit that subscribe button, hit that button. And if you like the video, like that video, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back to some Chris Sane.
Average cost is, let's just say your average cost in APOD is 16. Put your stop loss at $20 so that you in it. We ain't thinking it's gonna come back down to 20, and if it go higher, cool, you just take the 20 off and you move it up to 26, 23. Okay, but do that for all of your plays. If you're up 20%, 40%, 60%, 80%, or 100%, so that I know and have the peace of mind of knowing you are protecting your profits. Okay, I don't like to see you guys waste our hard work. Okay, waste our due diligence, waste our effort by making the money, and then you either holding out for a target that didn't get hit, and or you just being greedy, and then you see the play coming back down, and then you let it come back down and through where you got it at. Now something you was up $400 in, you're now down $100. We don't do that. We don't do that. So tighten up. I'm gonna help you guys tighten up in those areas. That's called proper risk management, and we have to do that by locking in profits, selling when we're up, putting a stop loss on, using this trailing stop loss, and not letting green turn red. So listen, Coach gonna get you guys up out of here. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor, don't forget to subscribe to the channel. Make sure you guys grab some free stocks using my link below, and I'll catch you guys in the next one. Peace.
How about some Zip Trader?
Folks, you better get ready. We've got a lot to discuss. In today's video, we are going to talk about the top 2 stocks to buy early in October 2025. We're going to present the facts, the data, the evidence, and show you all of the receipts and let you be the judge. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. If you're getting frisky, you got to think about your risky, and vice versa. Very important, and the greats have all agreed with this. Okay, let's start with number 2, which is Albemarle Corp ALB. So for context here, one of the biggest stories that you're going to see play out in the next quarters with this Trump administration is them taking stakes in big public domestic companies in key sectors. Now, we've called out several of these this year already, like your MP, your INTC, and the one that got confirmed this morning, ALAC. Whenever the government decides to give a partnership, give some regulatory benefits or some subsidies to a company, well, usually that company ends up doing a big rallyito. But the beauty here is that this game is...
I think this stock looks beautiful right now. CCJ. Uranium. If you are over on YouTube, I will see your comment. And if you have a question about what's going on the screen, that's cool too. It is nuclear time. Here goes. There's one stock that is about to skyrocket. It is a uranium stock. Uranium is very important for nuclear reactors, and nuclear reactors are coming online in the next 3 to 5 years and beyond to power data centers at the blessing of the government and big tech. So there are small nuclear reactor stocks that are also pumping in the last few weeks. Uranium going with those makes sense. This stock, CCJ, is at an important price level where you can buy it with low risk and get a big reward if it goes up. So this is my idea, and let's jump into the chart. Hit that like button if you like these ideas.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's the idea. It's just an idea. But if you look back to late July, there is a peak there. And after earnings, the stock sold off, came back, and now we're at a level where it appears to be hitting that level and holding. So if it can hold over the next few days, these days are very compressed, and there could be some moves to the upside in uranium stocks. I don't know that the other ones are as safe to buy. LEU is super extended. UUUU is okay. It's also pretty crazy extended, 170% up from that green line. That green line is called the 200-day moving average. So it's on Robinhood, for example. If you go to Robinhood Legend and take a look at the charting software, it whatever it's called, I don't know what, if it's Robinhood Legend or what their charting software is called. I guess it's Robinhood Legend. But this is what it looks like. It has that green line. And That's by default. I didn't put that line on there. So I just did the two-factor on my phone. It's got that cool noise. And if we look at CCJ on here, CCJ, this is, all right, well, it doesn't have the 200 day. It doesn't have the green line, but it's got all the other lines I got on my chart. It's got the 20, the 50, and the 10. This is the 50, this is the 20, and this is the 10, that blue line. So whatever software you use, I'm just showing you this to show you how important these lines are. So if it's by default on the most popular retail investing platform in the world, then a lot of people are using it. And when a lot of people use a line, that means the price starts to act somewhat predictably around that line. That's all I'm saying. So if we look down here, I'm just going to switch over here because I'm so used to this. I'm sorry. But if we look down here, we're talking May, right? I can't even tell on this because I'm so not used to this. Yeah, this is May. Okay. You know what? I'll challenge myself. I'll do it over here for everybody because we can all agree on what Robinhood is, even if I think that it's not as user-friendly as this other one I've got going on here. This is Schwab Thinkorswim software. It was owned by TD Ameritrade, and Schwab bought TD Ameritrade, so Schwab owns this software. But this is Robinhood. When these lines come together and they cross, they all get super close, the stock starts to move up. That's sort of what's indicating that the stock is changing direction. Or if not changing direction, well, it is changing direction, but it might not keep going, okay? But the whole point is that you don't have to just look at the lines. We can get rid of these, actually. If you're just looking at this chart, it starts to look a little bit like a kaleidoscope. At least I see a kaleidoscope a little bit. Whereas if you put some lines in here, and you don't even necessarily need that one. Let's just say you put this one in here. You start to get a better idea of what's going on here. It's slowly turning up, and you can see how it acts around this line. So you could say it sort of almost touched it here, sort of almost touched it here. Sort of like went above it and then touched it and then went up more, used it as a level of support here. And if that sounds like I'm being super fugazi with it, let's add this one that follows it even more closely. It's an average of the last 20 days. So with this one, you can see how it sort of almost touched it here, sort of almost touched it here, sort of did touch it here. And as soon as it crosses it, this line is great for deciding when to sell, because let's say you have this line on your chart, which, like I was saying, everyone who opens up Robinhood has it on their chart by default. So you have to literally turn it off, like I did with this one that says 50. You have to literally make it invisible to get it off your chart. So this one's great for deciding when to sell, because if you buy it, let's say you don't buy it here, you're not perfect, okay? Let's say you buy it maybe here after this little compress flag situation here. Went sideways for a bit, you bought it, and you bought it in such a way where, you know, maybe you bought it here, maybe you bought it here, maybe you bought it here, maybe you bought it here. whenever you bought it, even if you bought it here and your risk happened to be below the next day where it went down, you were risking a few dollars. Or, you know, you saw on your phone that you bought it around a 51 average, and you saw on your phone, let's say you took a, oh geez, 1,000 share position. Okay, so you have $50,000 in this stock. Okay, you have $1 million portfolio. Make it super easy numbers. You put 5% in this stock. Okay, and that's 1,000 shares. If you're down a couple grand, and you're like, okay, that's pretty much my limit. 4% would be down $2 a share on a $50 stock, right? And you're like, okay, fine, 4%. I'm gonna definitely stop out if I'm down 5% on this position. If I lose $2,500, would be 5% of a $50,000 position, which is 5% of a $1 million portfolio. So down 5%. Stick with me here. I think I'm going to land this plane. You're down 5% of a $50,000 position, and that position is 5% of your portfolio. That's 5% of 5%. That's 0.25% that you're down on your account, which is $2,500. Okay? We can all agree on that. So if you're okay with being down that, and you hold because you decided when you get in, you're just going to sell 5% down. Then you get a little push because you held through all the sideways. This is why we don't day trade every day. We're not in the stocks community talking about, hey, this stock is up 0.5%. This stock is down 0.5% on the day. Because you can't, I can't. Almost everyone, I don't know anyone who can predict it a lot. I know people who day trade. I know very few of them who do it profitably. Most people who trade profitably do it over longer periods of time, 3 to 5 days at the minimum. So if you're in this stock and it's gone sideways for a couple of days, maybe you're up a few percent, down a few percent. Like the example I just talked about, you were down 4% if you bought on this day here. And you came back up, you're fine, you're break even, and then suddenly you're in the money a little bit. If this little green day, you know, at the end of this green day, it closed green. In the money means you're making money. You're in the money. Position's green, and then the next day it gaps up, okay? And it's a green day, so it closes green as well. So now you're up about 13%, something like that, right? 10% of a $50 stock would be $5, so you're up more than $55, you know, price. So now that you're up more than 10%, you sell half your position. So it's a $50,000 position. You sell half, and the second half you hold, and you decide, hey, this line is on everyone's charts. I'm just going to sell when it hits this line or goes below this line. Goes below is usually what most people would say it means when you say you're going to risk this line for your second half of your position. Well, guess what? If you do that, look at this move on CCJ. Yeah, you locked in half your gains, and so you feel good and you can hold this position, and you're not worried when it dips down a little bit, when it goes down a few percent, when it goes down a few dollars a share. You're not worried because you already locked in some money. So you can just hold through this whole line all the way until up here when it touches this line. This is a full month. So this is why this is not a day trading strategy we're talking about. This is a full month of this stock being on your phone, in your broker, on your computer. You don't have to look at it every single day. You just take a look and you say, oh, it's up a little today, it's down. And you look a week later, it's up more. And then a month later, you're up more. And then it starts to pull back a little bit. And you notice after like a week of maybe you check your phone once a day, right? Or I do check it more than that, but I'm just saying you could check it once a day. After a week of checking it once a day, you notice it kind of went sideways for about a week. And then you check in on your Robinhood or whatever software you use, whatever app you use, whatever charting software is on your computer, and you see it hit this line. And then you sell out half your position. And you know what? That would have been a pretty smart time to sell because you free up that money. The stock just went sideways for 2 months, basically. And yeah, it went up a little bit more. So maybe you could have made some more, but you could have bought a better opportunity. So that's a little moving average lesson. And this is a great stock to talk about for that lesson because it just trended for so long here. But right now, again, the idea is there's some compressed days. You can risk a few dollars and then you make 10, maybe sell half your position, and then you hold it and use one of those lines to hold the rest. So we looked at some other uranium stocks. We looked at some price levels. And if you like these stock ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. You can ask questions in there. And if you haven't subscribed yet, hit that subscribe button. And if you like these videos, hit that like button, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump into some more Zip Trader here.
Just getting started. Quote, the Trump administration needs to strike multiple deals with U.S. miners to secure the nation's supply against China, said Mark Chalmers, CEO of Energy Fuels, a miner focused on uranium and rare earth minerals. The Pentagon decision to take an equity stake in MP Materials, the largest U.S. rare earth miner, in July and support the company with a price floor surprised many in the industry. But it was a necessary step that the White House should now follow with more deals to diversify the U.S. supply chain and reduce the risk that would come with backing a single national champion, the CEO said. So let's back up a second. Why exactly is the U.S. government so set on going into the free market, taking stakes in companies, and giving them massive favors? Well, here's why. Quote, rare earths are key inputs in weapons platforms such as F-35 warplanes, as well as consumer products like electric vehicles and smartphones. The U.S. is almost entirely dependent on China, which supplied 70% of rare earth imports in 2023, according to the U.S. Geological Survey. So in other words, the free market approach that the U.S. has taken to this field for many, many years has actually gone and left us dependent on China for many, many critical components and elements and minerals that we need for very, very important parts of our economy and, of course, national security. Perhaps if everybody played fair on the global stage, you wouldn't have to do this. But because other countries are going and putting their thumbs on the scales, namely China, well, that means that either the U.S. can do the same thing or the U.S. has to bend over and just buy everything from China. Let me make an analogy for you here. So when I was in middle school, we had this fundraiser about every year where each kid had to sell these chocolates. They were the same brand that you see pictured here. And you get a few boxes every spring and you had to go and sell them and give the money back to the school. And whoever sold the most chocolates would get a day off school and get to go to Disneyland. So every day after class, I'd go and I'd knock on a bunch of doors in my neighborhood and I would sell lots and lots of chocolate. And I was a fat kid, so a lot of people could see that I had passion for the product. They probably thought if we don't buy this from this kid, he's going to eat all these bars and he's going to end up dying. So anyways, at the end of the fundraiser, you'd have everybody in the class go and they'd tally up the numbers and the teacher would name the winner. And at the end of each fundraiser, I kid you not, there was always at least one kid whose parents decided, you know what, I'm just going to buy 50 boxes for my kid and make sure that he wins. And then the kid would go around bragging, I sold all these boxes. And I'm like, you're full of shit. But anyways, what I learned from this is that as long as some kid's parents were subsidizing his sales, there was no way I could compete just doing it the natural way. And this is exactly what happens with very, very critical industries within the United States. Sure, if all the regulatory frameworks and the subsidies and everything were the same, maybe we could compete here. But as long as China can put their thumb on the scale and dump dirt cheap product onto our market, our industry won't be able to compete. And the key area that the government is focusing on right now is lithium. Why is lithium so important? Well, for starters, military and space power. Lithium batteries enable drones, satellites, submarines, and next-gen weapons of many kinds, making them the backbone of U.S. defense mobility and space superiority. You've also got energy and base resilience. Lithium storage ensures U.S. bases and data centers stay operational during outages, cyber attacks, or grid disruptions. Of course, there's supply chain independence. Reducing reliance on China safeguards defense readiness from choke points or embargoes, which has happened many, many times historically if you look at history. Not necessarily with China and the US, but with many, many countries. Shite hits the fan, what happens first? Embargoes, choke points. There's also geopolitical leverage. Control of lithium resources strengthens U.S. influence in the global competition for critical minerals, and future tech advantage. Lithium underpins electric combat vehicles, hypersonics, AI infrastructure, and directed energy weapons, securing America's edge in these key segments. So obviously lithium, very, very important. Now today it came out, and this is something that we talked about, I believe, a week or so ago. We said this was likely going to happen, but today the government moved to confirm its stake in LAC and its backing of LAC. And this is great, and that's why the stock has done so well. But I believe there's going to be more companies in this lithium space that see this kind of government partnership and backing. And this company is ALB, Albemarle Corp. This is a company that has actually had direct help from the government before, and I believe is set up to have it again. So why this company? Well, for starters, strategic lithium positioning plus U.S. footprint. Albemarle is one of the few vertically integrated lithium battery materials plays with real U.S. exposure. They operate the Silver Peak, Nevada lithium resource, the only active lithium resource in the U.S., and they have U.S. processing, conversion, and project development activity. They are also pushing to reopen and scale their Kings Mountain, North Carolina hard rock lithium project. Albemarle is investing in U.S. lithium value chain expansion as well. Example, their Megaflex processing facility in South Carolina with a $1.3 billion plan. Now, the company has already secured DOE grant/federal funding awards to support U.S.-based lithium operations or processing. For example, the specific $67.1 million DOE grant in 2024 to support lithium metal anode production in the U.S. Also in 2023, it got a $90 million grant from the Department of Defense, the DoD, to expand domestic lithium mining production. So in short, ALB isn't just a global lithium play. They are increasingly positioning themselves as a domestic U.S. critical minerals anchor, which gives quite a lot of optionality if U.S. policy continues to favor onshoring. Now, because ALB is already deeply embedded in U.S. critical material strategy, I think it's well positioned to benefit from future supportive policy or direct government structures. But let's go over to the chart. So this is what I sent out to Discord members. Quote, as the Trump administration continues to make...
All right. ALB looks a little extended right now, but that's not the word I meant to say. It actually looks all right. I don't know the word to describe it, but maybe it's just choppy. Let's take a look at a recent IPO here. I can see comments over on YouTube. And you can see the screen now, so that's great. And let's hop in to this new IPO. Gemini. There's one stock that I think is a good opportunity right now. It is a recent IPO. It is a crypto company from Tyler and Cameron Winklevoss. Yes, those Winklevi from the social network, from the Facebook Mark Zuckerberg, who had the idea first, fame. Let's jump into the ticker. This is GEMI, Gemini. You might have heard of their crypto exchange. This recent IPO is their future Coinbase. Let's see how realistic that is to call them a Coinbase competitor. And let's look at the chart as well. If you like these ideas, hit that like button.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Here it is. Gemini Space Station is the company name. So they're calling it a cryptocurrency exchange and digital asset services provider. So like a decentralized DeFi solution. I think they would like that name. They also have a credit card with rewards and a stablecoin. And it was founded by the brothers 10 plus years ago. It's now going public. And this is the chart. Okay, so IPOs are supposed to go up because there's supposed to be more buying interest in the public than in the private. Of course, what they're really supposed to do is just go sideways if they're priced accurately, right? Oftentimes, they go down. We know this. And even if they do go up, sometimes they still go down soon after. Like the Figma IPO is an example of that. CoreWeave is another recent IPO that went up and then has settled a little bit. And then Circle is a similar IPO that did something like that. Now, why am I talking about Gemini? Gemi? Because it looks like the volume is pretty low here. So if people wanted to sell, they could have sold pretty quick. Now, there could be lockup conditions where a lot of these holders from when it was private can't sell until March, which would be 6 months after September when this IPO'd. But until then, the chart seems to be going sideways. There seems to be some compressed days. It kind of is turning up a second time here. So if it can get over this $24 level and stay over it, then that seems like a good level to risk for maybe a move to 28, 30 and beyond. So that's the chart. And if we jump into a little more about what the company does, well, here you go. I don't know exactly how to deal with all of these details as far as investment banks or companies. NASDAQ is a company that is listing this company, Gemini. So instead of worrying about all that, which I could get some of it right, I could get a lot of it wrong because I'm not in these conversations in the right building on Wall Street in the financial district. That is somewhat of an advantage because when you're not in those conversations, like almost all of us and everyone watching, you just look at what actually has happened. So you don't tune into CNBC talking about how this is the Coinbase of the future. You don't tune into the All In podcast, if they're on the All In podcast, where let's say Trump goes on the All In podcast, which is a Silicon Valley podcast, and he starts talking about how Gemini is the next JP Morgan. Maybe it is, maybe it isn't. What we do, what I'm talking about here is we see what the buyers and sellers are actually doing here. So far, it looks like, yeah, there was some IPO euphoria on day one, whatever. This is not a day trading show. It's been a few days. It did sell off here. It was good to not get into this. These are tight days, but these are also red days. So I'm not a huge fan of getting in after a couple red days. And this thing sold off, and there was a little bottoming and then another curl down, and then now it looks like we're having another bottoming. So if we just look at the last 10 days, yeah, it's choppy, but it looks like this level is starting to hold. So that's how these decisions are actually getting made by a lot of big traders, not based on what people say about what Gemini is going to become. There are some publicly traded tickers that include Coinbase that are encouraging. So if we look at Coinbase, this is at an important spot. This was listed, let's see. What is this, 21? May of 2021. So it has this peak here in November that it just got over. It sort of tested that peak at the end of last year and then blew through it after all the craziness of this year. And now it's coming back and it just got over that peak again. So the IPO price, the open is 381, which we're really close to right now. And then it gets up towards 430 as far as the high on that first day. So if we can hold over that 481, that's pretty bullish. I don't say that you want to buy Coinbase right now after so many green days in a row. I would like it to go sideways. That would be great. Sort of, near this left side peak here, which is really close to that 381 IPO level. And see, again, that 381 level is important. This was because of earnings, or the reaction occurred on the earnings day. I'm sure it was because of earnings. But the point is that level is important. And if it goes sideways, there's an opportunity to buy it really close to an important level. So this isn't about Coinbase because I'm trying to talk about stocks that are going to go up soon. I don't know exactly I don't know how long Coinbase is going to go sideways for. A week, 2 weeks. Gemini, on the other hand, this one is going to act similar. It's going to be influenced by how Coinbase trades. That's what I'm going to say on a day-to-day, week-to-week basis. So with Coinbase shaping up, that's good for Gemini as well. And IPOs respect technical levels really well because there is not much trading history. There's not much news that's publicly circulated. I mean, there's only been less than a month of history at all of this being a public company. So everyone's looking at this chart is what I'm saying. And that's why there can be some pretty wild momentum. Like CoreWeave, for example, had some pretty wild momentum since its IPO. Of course, that earnings helped as well, but there was sort of an opportunity to get in after that earnings with a pretty tight stop, and you had a lot of moves to the upside. This is not my favorite option. Not my favorite trade plan to get in after an earnings reaction like that, where it's actually a sell-off day. But it does give an example of how you can get in to an IPO and this thing can just trend. And you can use one of these lines like I was talking about earlier. I was talking about how you can sell some of your position when it comes down and hits one of those lines. And look at that. You sell half here, you hold the half that's left, and you just don't sell until it hits that line. Well, that would have been a pretty good spot to sell because it just went down after that. So that's sort of the game plan for Gemini, looking for an opportunity like that. Galaxy Digital is pretty similar as well. And then this crypto platform is helping as well. BKKT has been going crazy. So Galaxy is interesting too. It's just a little more, needs to level off a little bit, but it's getting to be at a pretty important price if it can bounce off this level. That's super interesting as well. So that's the ticker. That's the price levels. Those are some similar stocks, crypto exchange stocks. And if you like these sort of ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. It is a place to ask me questions. There is a weekly course member live stream. By paying the $25, you are in that. You get access to one of those live streams because it is every week. So give it a shot. You can see recorded live streams as well from the past couple weeks. So I'm not quite sure how I'm going to deal with the, keeping all the recordings up or not going forward. But I'm just saying, if you hop in there and you want to watch some instruction, there's a bunch of stuff as soon as you hop in there to watch. All right. If you haven't subscribed, hit that subscribe button. And if you like this sort of content, hit that like button. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump into some more Zip Trader.
An effort to take stakes and or heavily back companies that are critical to U.S. critical mineral/material independence, ALB is setting up for a potential long-winded recovery cycle. Breakouts well above the $150 plus line are likely, in my opinion, if the White House specifically targets ALB in a similar way that they did the LAC deal this morning. So big opportunity with ALB. I think you're going to want to put this one on top of your radar for sure. Okay, number one, CRCL, Circle Internet Group. So Circle is the biggest publicly traded issuer of stablecoins. If you're talking non-publicly traded, there's Tether, but of course this is the biggest publicly traded one, and it's number two if you're talking non-publicly traded. And it's being helped massively by new government policy, and I believe long-term Uncle Sam is going to drive the price up quite substantially. So listen to these headlines.
There it is.
Quote, stablecoin surge will preserve U.S. dollar dominance, says Donald Trump Jr. Stablecoins will save the U.S. dollar, says Eric Trump. Now, why do you have these Trump brothers coming out so hard for stablecoins? Sure, they do have a crypto company and a lot of incentive to say positive things about crypto-related assets, but this goes much, much farther than this. Their papa, President Trump, has put the weight of the U.S. government behind the cryptocurrency industry, and specifically stablecoins, which nobody's paying attention to. So let's back up for a second. Why would the U.S. government like stablecoins? What the hell? Step one, money goes into stablecoins anywhere globally. Step two, stablecoin issuer receives fiat, US dollars. Step three, issuer must hold reserves to back each token, and reserves are placed almost entirely in short-term US treasuries. And step four, stablecoin maintains its $1 peg with the system, and the stablecoin issuer gets treasury yields as a compensation for this maneuver. But the TLDR here is that massive inflows into stablecoins means rising demand for US treasuries and a stronger USD. The fact that stablecoins are so connected to US treasury bills, specifically and directly connected, well, that means that any policy that supports more and more investment globally into stablecoins also, by extension, supports more and more money going into US treasury bills and a stronger US dollar. And this is happening at a time when many countries are actually trying to get away from the US dollar. So if you want to stop the trend of de-dollarization while making sure that the global crypto industry continues to remain largely pegged to the dollar through stablecoins is very, very important. Now, Trump just passed the Genius Act, and this is a very, very key component of this overall stablecoin trend and policy. So first off, what did the Genius Act do? Well, it's basically reclassifying digital infrastructure as critical national infrastructure. That means that the same racks and GPUs that used to be considered risky crypto mining operations are now politically blessed, subsidized, and viewed as necessary for US competitiveness. So where stablecoins come into this is they're now treated as rails. The act frames dollar-backed stablecoins as a strategic payment rail. Think of them as the plumbing of digital finance, instant settlement, 24/7 payments, on ramps and off ramps. By blessing stablecoins in this way, Washington just unlocked institutional demand and de-risked the entire ecosystem, and more importantly, made sure that this ecosystem that benefits the US debt, and the US dollar remains attached to it. And what's a big company that benefits from this? Well, companies that build and host the rails, like CRCL. Now, why is CRCL set to benefit from all this? CRCL already runs high-density compute campuses all over the place. Under the Genius Act, that same infrastructure, the racks, the power, the validation nodes. Well, all of that now qualifies for subsidies when used to support stablecoin settlement networks.
CRCL is interesting. I don't know that it's interesting today, but maybe it is. It is at this level. It's definitely a change in character here. It's getting pretty close to this big number here from here. So, whoops, BMNR. Let's do a little breakdown here. If you are on YouTube, I do see questions over there. And do have some info here about Ethereum. Let's see what we got here for Ethereum Bitmine. There's one stock that is about to break out. In my opinion, it is led, the chairman of the board is Tom Lee of Fundstrat, CNBC, Wall Street, Main Street fame. The ticker is Bitmine, BMNR. It is an Ethereum treasury, and Ethereum is the second biggest cryptocurrency after Bitcoin. Started by Vitalik Buterin, the guy who looks like he started a cryptocurrency. It's looks like it could go up. It's doing a little better than Bitcoin right now. And this company, BMNR, is a way to invest in Ethereum through a treasury company. It's not the most direct way to invest in Ethereum. I don't recommend, if you want to go buy some Ethereum, to buy BMNR. However, you can play momentum by buying this ticker, and I'll show the price levels and why I think there is an opportunity there to participate in that momentum. If you like these sort of ideas, hit that like button and let's get into it.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is Bitmine Immersion Technologies. It's an Ethereum treasury company. So that all started with MicroStrategy, which is the Michael Saylor led company that used to be a software company. And Michael Saylor just started buying a bunch of Bitcoin because they got to a point where they had cash on their balance sheet and their existing business was not growing. Their software business was not growing, so they couldn't get more clients or they couldn't develop a new software. So they said, okay, well, this cash is just losing value. Let's just buy Bitcoin. And then they just kept buying more Bitcoin and the price of Bitcoin went up. And then because the price of Bitcoin went up, their treasury of Bitcoin went up. And then the company became a way to invest in Bitcoin if you're an institution or if you're some big family office or fund, sovereign wealth fund that wants to buy Bitcoin, but through their mandate can't buy cryptocurrency because it's dangerous, but stocks are not dangerous. So all these entities started buying MicroStrategy, the stock, as a proxy for buying Bitcoin. And then MicroStrategy price just went up and up and up. And now everyone's wanting to do this with other cryptocurrencies, like Ethereum is the next biggest one. So in September, they had over 11 billion of crypto and cash, 2.5 million Ethereum. So they have 2% of the total Ethereum supply. And they're one of the largest corporate holders, and they want to acquire more. What a surprise. So this is the main guy, Tom Lee. People know Tom Lee who look at their portfolio a lot or look at, you can't escape him. I'll put it that way. If you're looking at CNN, CNBC, I was going to say Bloomberg. I don't know if he's on Bloomberg. I don't know if he's their guy. But here's the deal. He's an extremely smart cat. And this company does have support from Cathie Wood, from Peter Thiel's Founders Fund. And Peter Thiel is the reason that some of these people are buying this company. So it has had a euphoric run. This was July 1st. It's leveled off since then. And if you knew nothing about the company, which is always how I like to come into a chart and say, oh, is this balloons make nuclear returns? So it's a balloon company. I'm into that. Look at the chart. People clearly want whatever this is. So the volume is trailing off a little bit. It's kind of the same as it's been for about a month, but the lows are higher, and it's starting to get to a spot. There are a lot of spots here where, oh, this is the time to buy it. And then, well, if you are still above where you bought it, but it's had some fake outs. We can see that. If some volume comes into this could definitely have a big move, and you don't need a move like this to make some money from 25 to 150. I mean, that's totally insane. That's IPO's level move. This is a double, literally 100% move in about a week. So there's definitely something firming up here when we zoom in that becomes a lot clearer. And as we get closer to more and more days like this that are, 1% or something, 2%, you can risk very little on your position. Once again, 500K portfolio, you put 10% in BMNR, that's 50K, you risk 4%. Really, I would hope you would risk less than that, like 2%. But let's say you risk 2% on a 50K position, you're risking $1,000 for the opportunity to make 10%, which on a $50 stock is $5, which is $5,000. And that's the baby case. I mean, there is a opportunity here where this could, if it builds out a little bit here. Today's probably not the perfect day to make this video, if we're being super real. I mean, it could go sideways a little bit here. But you know what? There is a level here. There was a reason I chose this. I'm just kind of scratching my head as to exactly what it was. I know why I chose it in general, but as for exactly today versus next week, I think this level is sort of interesting. It's $56. So, if you risk 50 cents, I personally like risking extremely little and losing a lot. Like, let's say you lose 70% of your buys, meaning you stop out for a small loss. That's pretty cool. And you might be like, well, why is that cool? And you probably already hearing what I'm saying, which is that because on the 30% you win, you more than make up for those 70% of losses. So you lose 2%, which is $1 on a $50 stock. And you do that, 7 times, losing 2% on a 10% of your portfolio position. You're losing $7,000 on that. And then your 3 wins are 10% on that. And that's $15,000. So you pretty much doubled your losses with those wins. So you're up $7,500. Something like that. Those are made up numbers, but they're super clean numbers. And 10% doesn't look like a lot, does it? So that's sort of the name of the game. That's a serious, intensive look at the price levels. And if we zoom out a little bit, I mean, this is totally crackpot analysis to say that you're going to use a discounted cash flow model on valuing an entity that holds a cryptocurrency. Right? This is the cryptocurrency. This is the important bit here is this ain't Bitcoin, right? If you look at Bitcoin, that looks good, right? And it's getting back up towards this high here. This is actually the ETF that holds Bitcoin, right? This is Bitcoin. That's the number we recognize. 125,000 is that high. And this is what Bitcoin looks like in the last 5 years. And this is what Bitcoin looks like in the last 20 years. So this was FTX somewhere in here. And then we got through the FTX story. We broke through. We retested, broke through. It started to look like Bitcoin was going to come down a little bit. Sort of here. And then we just held. So we're sort of getting higher highs. Ethereum did have a breakout as well. Right here. Well, a gap up after this sort of one day breakout. I'm just saying break up because this is this must be a Sunday, a Monday, Tuesday, Wednesday, Thursday, Friday, and then a Sunday. So this shows Sunday trading on this stock. So some of your brokers do show trading on Sunday. Futures open at 6 p.m. Eastern on Sunday. So you can see your position starting at 6 p.m. on some brokers. And some of your positions will actually trade on a Sunday night. And even 24-hour trade as well. So you don't have to look at it 24 hours at midnight. Because that's not smart. But if you look at Tesla, for example, today is a Friday, Thursday, Wednesday, Tuesday, Monday. This is a Sunday, and then this is Friday. So not much happens on Sunday, but it can lead to some sort of strange looking charts like that. This is a Saturday and a early Sunday gap here. So Ethereum is shaping up. It does need to go for BMNR to go. Sort of at an important level, 142 that it got above. So, after 4 days up on Ethereum, 3 days up, it could go sideways for a bit and then we'll see what happens. But Ethereum needs to go for BMNR to go. But they are both at levels that are pretty low risk levels to take a look at, which is that $55 spot. So that's Ethereum. MicroStrategy was the pioneer. And there are some tickers that are similar, Coinbase and Galaxy Digital are similar just for the theme, but it's a pure play to just look at ETHU itself instead of looking at the crypto stocks, the crypto exchange stocks, or the crypto miners that are moving into AI infrastructure anyway. So they're less likely to follow Bitcoin. MicroStrategy hasn't been doing so hot, so I don't know that you even necessarily need to take a look at the MicroStrategy chart because it just does not really resemble Ethereum, for one. It barely resembles Bitcoin at this point in the past couple months because they have to sell their shares to buy more Bitcoin, which means you're buying shares that they're selling, which makes their stock go down. So it's not super logical to buy any treasury. MicroStrategy or Bitmine, unless it's at a time where there's a lot of euphoria for Bitcoin or Ethereum. I mean, this move is absolutely insane, right? In a couple weeks, this is pretty much doubled. If you look at Bitcoin in November of last year, this is the Bitcoin ETF. Like, sure, Bitcoin was going up, but I mean, this is a double too. MicroStrategy in particular got pretty interesting because there was a lot of opportunities to trim into the moves. Like, this move was pretty monstrous. This single day was 20% and then it happened again. So over that period, it moved the same as Bitcoin, which is this Bitcoin ETF mirrors Bitcoin. So this Bitcoin ETF had one big 10% day, but it didn't have those crazy 20% days. So that's what happens when you start buying a leveraged play on Bitcoin. So that's the type of momentum potential for Bitmine, BMNR, if Ethereum goes up. That's the idea. I think the risks are pretty clear at this point with all I've talked about. If you like these sort of ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. And if you haven't hit that subscribe button, hit that subscribe button right down there. And if you like these videos, if there's anything I can work on, I'm trying to talk louder, let me know. And if you like it, I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's get into some more Zip Trader.
While the U.S. government is now indirectly backing CRCL and CRCL's build out. Now, this creates a dual revenue model for the company. This creates quite the beautiful setup. Stablecoins bring transaction volume and staking demand, and AI brings GPU leasing and enterprise contracts. Both sides now fall under the Genius Act's umbrella of critical digital infrastructure, which means this company has a rocket up its rear over the coming years, at least until Trump finishes his term. And if the next administration takes the same approach, which they should, because this is actually very, very beneficial to the U.S. government, well, you should continue to see CRCL and the overall field of stablecoins dominate and become very, very big. Okay, next. So if you are a Discord member, we just ordered CRCL calls, and if you'd like to see those, you got to join us with that first link down below and go to the option idea tab. But just to give you the overview of the upside potential points that we highlighted. For starters, stablecoin dominant. CRCL is the largest publicly traded stablecoin player. If stablecoin circulation grows 5 to 10x, CRCL is a direct and quite frankly exponential winner. There's U.S. policy tailwinds, which we just discussed. Genius Act cements stablecoins as strategic payment rails and unlocks subsidies for CRCL's infrastructure. There's Treasuries demand. Every stablecoin minted forces issuers to hold U.S. Treasuries, and inflows strengthen the USD and benefit CRCL as issuer/host. Subsidized infra build out. CRCL's compute campuses, racks, powers, nodes now qualify for subsidies when tied to stablecoin plus AI hosting. There's the dual revenue model, stablecoins to transaction fees, settlement rails, and long-term tenants. And then you got AI to GPU leasing and enterprise hosting under the same critical infra umbrella that is backed by the government. And then you have political and institutional blessing. By treating stablecoins as rails, payment rails, Washington reduces risks and opens the door to mainstream financial adoption and institutional adoption, and overall causes more and more money to flow in, which cements this space. Anyways, folks, let us know what your favorite stocks are down below. That caps off today's video. Make sure to join us in the Discord down below with that first link if you'd like to get the full Zip Trader experience, and you get access to all of our ideas and alerts and all of the features that we offer under the sun. Anyways, that caps off today's video. Have a great one. We'll see you next time.
All right, let's jump into a little breakdown here. If you do have any questions, I can see those on YouTube. But let's talk about AMSC, the semi stock. Okay. Let's see if they're connected to any big companies. AI infrastructure. Do they have big clients? They do. NVIDIA. That's not what I meant to ask. They're similar to a networking company. Diagrams are so cool. Oh. Give that another try. Here we go. All right. AMSC. This is American Semiconductor. Superconductor. Do a little breakdown here. There's one stock that is about to jump up, in my opinion. It is the picks and shovels for NVIDIA, which is the picks and shovels for OpenAI, ChatGPT, Meta, Amazon. These massive companies rely on GPUs, they rely on data centers, and they rely on superconducting power electronics. That's what this company does. American Superconductor Corporation, AMSC, is the ticker. Let's take a look at the stock and about what they do so we can decide if it's a good investment. Hit that like button if you like these videos.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Let's jump into a little diagram of what this company does. So starting down here, there's data center clients. AMSC sells their electronics to these data centers. NVIDIA requires AMSC because their GPUs are so power hungry. They need AMSC power electronics connecting all the GPUs within the data center. These data centers use these high performance servers. This is the hyperscaler high performance computing segment of data centers, which is most data centers. I'm gonna be honest, ChatGPT, this diagram was extremely confusing, and I'm not sure it was in order. But you get what I'm saying. They're connected to NVIDIA, not directly, but, well, actually, literally, they are connected to NVIDIA GPUs. here is the chart, and it's gone sideways after earnings, reclaimed. Moves about 5-6% a day, and right now it's super tight days, so it's only moved, well, 2% or less. Today is sort of a red day in the markets. Not sort of, it is a red day in the markets. But AMSC is just barely red. So it's holding in there. There's some relative strength. So what happens is the market's composed of all these big companies, right? AMSC is one of them. A bunch of big companies got sold off today, making the market get sold off, but AMSC was not one of them, at least not to a big extent. So that means there's more buying than selling in AMSC compared to the other companies in the market today. And let's say the market does turn up or goes sideways, there could be actually literally more buying than selling in AMSC. So there's more selling than buying in the SPY today, so it went down. But this is what we're looking at. Here's a line right here around $58. Hit it here. Hit it here. I like horizontal lines because everyone can agree on them, and you see that agreement oftentimes in the chart. It's just very visual. And a great example of that is NVIDIA when it broke out. Here's a line, hit it here, hit it here, hit it here. And it's not that people are doing what I'm doing here and looking at their chart. A lot of people are doing what people do. What I do as well is I open my phone and I say, okay, it got up here. I know the all-time high maybe, or I bought at the all-time high. And it's like, oh, it's getting up to where I bought it. After going down, I guess I'll sell it because I'm break even again. Now, I don't really invest like that, but I certainly have in the past, and I know tens of millions of people do invest like that. So they keep selling, and suddenly when some of them do sell, or they've all sold. And so when it gets back up to this line, no one's left to sell. There's more buying than selling, and we break through. So that's kind of why the lines actually mean something understandable. Like that makes sense. So there's a line for AMSC around $59. You risk 25 cents, something like that. And look, I mean, are there days where you say you're going to risk 25 cents and what really happens? I haven't said to buy Netflix on one of these days, but let's say I did say, hey, let's say this video was about Netflix and I was saying, hey, this video is about Netflix. This day is really compressed. Let's say I said, oh, there's a line there. There's a line there. It almost pains me to use this as an example because I wouldn't do this because this low is lower than this. But let's say I did. I said, hey, you can risk 25, you can risk a few dollars, a couple percent, whatever it is, 1%. All right, even in this example, you would have been all right, right? Because yes, it did go all the way down here. So maybe you did lose a couple percent and you were only expecting to use 1%. But it took a few days to get down. But yeah, that's an example of you try to risk a couple dollars, maybe you don't check your phone for a couple of days and suddenly you're down, well, not a couple dollars because this is $1,000 stock, so you can't really risk a couple dollars, but you try to risk $10 and you end up losing $20, okay? But again, that's not even a stock that I would recommend buying at that time. AMSC, however, you're starting to get sort of a flag. You don't always know if it's going to break to the upside or downside, but you do see a little bit of a higher low here on this close. This close was above this close. It did wick down off this line, but it closed above. And now it's shaping up. Okay, So enough lines, enough technical analysis, enough charts. But I like the charts because it's not about getting all math obsessed. Okay, there's definitely some math going on, but it's simple math, third grade math. And this is telling the story of what the buyers and sellers are actually doing. Now, with all that said, it is great to also say, what does this company do, to make sure you're buying something that in the broader scheme of the market, it makes sense that it could go up. And it does make sense, okay? American Superconductor, they do the power electronics. And you need very efficient power electronics to make the best use of these NVIDIA GPUs. Everything is trying to get more efficient. And you need all the help you can get. So here's the company, okay? They basically enhance efficiency, reliability of power grids and data centers. They have high temperature superconducting wire technology. So they carry more current with minimal energy loss. So that's great for modern AI data centers. They have to pack all these GPUs in a small space. People don't want these data centers in their backyard. So the smaller they are, the better. This stock has, I don't want to read about this stock's price growth. We can just see it right here. From the April lows, the stock has gone on a 300% plus run. Now you might say that's not impressive. Well, NVIDIA did half of that, less than half of that. So I think it's pretty impressive. And there's a level, like we talked about, to buy off of. So is it going to go immediately? Probably not. You know, it's sort of a bigger company. This is like a reasonable average daily range. If you look at some tickers, like this is double the daily range, and you can see that in the chart. Like this thing moves, which is why everyone's talking about open door, open door, open door. It's the hot stock of the week. AMSC is not. And I like that. I really like that. Because open door, yes, I've talked about how it's a good time to buy it right now with low risk, but there's not no risk. I mean, this is $10 to $8 in a day. 20% is a lot in a day. So I like AMSC. There really hasn't been some candles like that for the most part. Here's a candle that was 10% down in a day, but you know, it also had a day where it went up 15%. This was just one candle. This day also, I don't know exactly how exciting it was at that time. It didn't digest for very long after going up quite a lot, so that's not super surprising. Plus, I had this candle as well that was kind of like a warning red flag. So over here, I mean, yes, we had this wick down, but it got bought up, which is pretty bullish. So now it's digested pretty much at this line. I mean, with some exceptions going down and going up. For how long is this? 2 months. But I said I wasn't going to get obsessed with the chart. I'm sorry. It tells more of a story than this information that everyone can read. This is like a book report. But it is important. Okay, they're not going to get any big moves based on OpenAI news. You know, if OpenAI comes out with an announcement that says their valuation just went up to 800 billion because their 500 billion round was so oversubscribed, they had to open it up to additional investors. That's probably not going to pump AMSC much, but it doesn't hurt. Here are the other tickers to take a look at. It is basically a semi-stock. I think it's going to move with the semi-stocks. I don't think there's that much relation to the big names here, Tesla, NVIDIA. It could pump with NVIDIA a little bit. ON is definitely pretty similar. And that ticker looks like this. Kind of going not much of anywhere. It's moved slow, so I wouldn't get too caught up on that ticker. This is a crazy move. This is definitely the name to look at. And yeah, I think this is an okay stock to be excited about, even though it's not directly tied to NVIDIA. It's just so far down the stack that it's not too surprising. It sells power electronics that make up chips and wires that connect GPUs and servers. It doesn't necessarily connect. It's not like they sell what is something that NVIDIA would directly use? Like some kind of gel that would cool their GPUs, or like a heat sink that would make their GPUs be able to work harder without getting hotter. It's not quite like that. It's more like the wires that connect them. But look, so they're pretty similar, and they're definitely in the AI infrastructure conversation, and the chart looks great. And you don't have to be an expert on data centers to know this company looks awesome. So that's the idea. If you like these ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. Hop in there. You can take a look at some recent course member live streams. There's one a week. So if you're there for 7 days, you're going to see one live, but you can also watch a recording of other ideas that didn't make these videos, and how you look at charts and how you look at companies to take something away from, a scan, basically. How you scan through a bunch of companies and decide out of hundreds which ones are worth looking at. Now, I'm trying not to overwhelm you. I'm not saying you have to look at hundreds of companies. That's kind of what this channel is all about. That's what this community is all about. I curate and I give you the best ones. Like very, very few. It's not a day trading room where I'm just announcing, oh, this company got news, or this company went up 15% today. It's like, that's not really super productive in my humble opinion to tell you stocks that are already up. So that's kind of what's going on over there. And if you want to try it out, check it out. If you want to subscribe, hit that subscribe button. If you like the video, like it, so the algorithm can spread it around. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump into some more video. We'll watch some dumb money. Why not?
Tesla could be close
This is
to
what I
revealing
actually
Gen
watch.
3 of their Optimus humanoid robot very soon. The prototypes that we've seen so far are not the design intended for mass production.
So I had to
Elon
watch
has
it with my
confirmed that they have not shown that to
YouTube
us yet. He's calling the new
folks as
V3
well.
Optimus sublime. Here's what we do know, along with some of the latest rumors. You can expect a sleeker design that's more capable. It's going to run Grok AI for voice and conversation. It might be able to handle thousands of useful tasks at launch, and it could even go into mass production as soon as next year, at least according to Elon. What we don't know is how much it can actually do without human help, how much it's going to cost, and if 2026 is at all realistic, or if that's just another Elon timeline fantasy with reality coming years later. Elon does seem to be fully back into work mode at Tesla, and he's way more into robots than cars at this point, even though Tesla just announced that they delivered more EVs last quarter than it has at any prior quarter ever. Elon says that Optimus will be more valuable than everything else Tesla does
look
combined.
interesting.
Wall Street seems to like that story. Tesla stock has nearly doubled in the past 6 months. And today on Dumb Money, we're going to tell you how we're playing Tesla and how Optimus Gen 3 could change everything.
This is Dumb Money Live.
Hey there, Dave here along with Chris and Jordan. We are Dumb Money. Welcome to Dumb Money Live. Quick reminder, if you don't mind, smash the like button for the almighty algorithm. It really does help other people find the show. Chris, Jordan, again, Tesla is my largest holding now that the stock is up so much. And Chris, I know you've been holding off on going all in on Tesla with your leveraged play. You keep saying it's close. You've been waiting for Optimus to come closer to reality. So inquiring minds want to know this morning, is now that moment for you?
Well, Optimus did come to reality, Optimus 2, and it sucked. But that aside, that's in the past, right? And that's been probably the I guess, disappointing story of 2025.
But Optimus 2 it's a prototype. It's not, and Optimus 2.5, which we've also seen, is a prototype. So we don't know yet what Optimus 3 is going to be.
Cool, correct. And that's what the storyline is all about, right? Tesla had massive first mover advantage here. This is what we've been talking about for 2.5 years as it relates to generalized robotics and humanoids specifically. And we had a pretty big thesis we put out a couple of years ago that this could easily be a $10 trillion sector of Tesla if the company simply executes. Over the course of that period, Elon got aggressively involved in politics, as we all know. He got spread really thin. He was massively distracted over the past year. And I think the one division that paid the price for that more than anything else was Optimus, which of course we now know, as we said 2 years ago, is the only division that really, really matters long term. And Elon has come out himself and said it's 80% of the value of Tesla will be Optimus. So, very disappointed in the progress of Optimus 2. We were aware of some of the issues they've been having all year, the approach, the aggressiveness into sim training alone, that very few of us that are deep into this sector thought would work out for them, and it hasn't. So now Elon's back. Now Elon seems to not be distracted. Elon has essentially publicly come out and stated that the entire future of Tesla is pinned on the success of Optimus. We now know that going forward, auto sales are going to be a headwind for Tesla, especially in the United States, due to the headwinds of not having a tax rebate, right? They lost that $7,500 tax rebate. So they had a huge quarter in orders, as we all expected. Maybe a lot
of that was because of the expiring of that EV tax credit. So
you're exactly correct. Now they did finally start to see a bit of a turnaround in Europe.
All right, let's jump into a little breakdown. A lot going on with Tesla for sure. I think it sort of needs to digest a little bit. Did have that sell the news on the delivery numbers, and I already had the big breakout, so maybe it can sort of offer an opportunity before earnings. Maybe not, maybe you just wait for earnings to happen at this point. You don't want to get in there and worry about what earnings are going to do. So here's the stock, BETR. AI-powered home equity lending. This move is nuts. So, this is 922. So what happened on 922? Looks like I knew it was related to Open Door. Not directly, but Eric Jackson has been talking about Open Door. Of course, he talks about this company too. I guess we can open this article. I know it seems like a waste of space. All right. I accept your terms. I don't want to subscribe right now, though, if that's okay. Okay, let's jump into a little breakdown here. There's one stock that is about to explode, in my opinion. It is a stock in the home equity line of credit lending space. They use AI to make these credit decisions. Home equity line of credit is when you have a home and you want to borrow against the cost of your home. So some people do that instead of taking a personal loan, or I suppose you might be able to take money out of your home instead of going and getting a business loan. A lot of people do it. It's super popular. It's in the same conversation as reverse mortgages, when people want to get old in their house and not lose their house. They're using AI to make these credit decisions. It's a huge market. The stock is BETR, and it went up recently because the same guy who's been all excited about Open Door, which you may have heard of, has gone up a lot recently. Eric Jackson is talking about BETR as well. And let's jump into the headline. Let's jump into the chart. Let's jump into what a company actually does, what other companies are similar. Open Door is kind of similar, but it's really just that this little hedge fund manager is stoked on it. So, got to give to the guy some credit. I mean, he definitely has conviction. If you like these sort of ideas, hit the like button and let's get started.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam.
So,
Putnam.
here's the headline. He's the man behind Open Door. Meme rally sparks 176% surge in Better Home. Here is the chart. Sorry about that little pause in the intro there. This is the chart, and it's shaping up in sort of a flag position. There's some compressed days here, and it looks like there's a nice way to get in where you only risk a few dollars, if not less, and you have potential to go up. Maybe not 50%. That's I'm starting to talk like Eric Jackson here. You can go up 10%, maybe sell half. Maybe it sort of bounces around here, you know, who knows what it's going to do exactly, but maybe you end up selling the rest of your position somewhere around here. Or, you know, you sell the rest, break even, and it goes down here. And you already locked in some up here, so you still make some money, even when your trade plan doesn't go how you want it to go. Okay. So, let's get rid of these drawings so I don't have to see them on my chart, so we can see what's actually already happened. This was Eric Jackson talking about it. This day was September 22nd. If we look at Open Door on September 22nd, this is what we see. Okay, a big sell-off. Open Door had already pumped, so it's kind of like the money moved from Open Door. It's not kind of like this. I think this is actually what happened. People sold Open Door and they bought Better. Now, I'm not advocating day trading where you sell a stock and then immediately buy another one because you think it's going to go up some crazy amount like Open Door. It goes up in a single day. This is 25% better. This is way more than 25%. I'm not saying that that's going to happen here. I'm advocating for getting in at a really safe spot where maybe you get a little jump like that. And it might be over like a week. But it's already shown it can make big moves, and it has a lot of compressed tight days. So you can risk sometime in here. And it's a good spot to risk because the price is traded at all that spot. So if it gets below one of these levels, then like you got to be careful because this could go right back down. But if it hangs there, that means everyone's making money. I mean, people who bought up here aren't making money, but they probably sold a lot of them down here anyway, which means new buyers bought down here. So when the stock price is above where a lot of buyers bought, everyone's making money and everyone's holding or buying more, or selling a little bit, but not selling a lot. The stock price is staying up. So that's the chart, and that's really all we need to focus on right now. I mean, it was one of those IPO sell-offs. You can see how important technical lines are for IPOs. I mean, it pretty much almost touched that $100 level, which is where an IPO opened at. So that's a level to focus on in the future, but right now, don't really need to worry about that. As far as what the company is up to, it's similar to Opendoor, but no, Opendoor, I think actually Better is up because Opendoor is down. That's sort of what we just showed by looking at the stock chart. They are pretty similar, a digital real estate marketplace, and they're trying to use AI. Of course, every company, especially new companies who are trying to raise a bunch of money from now public investors when they're listed, are going to be talking about AI. I don't know how much AI each of these companies actually does, but there are some other tickers that are also in the mortgage and mortgage technology space. Redfin, Rocket Mortgage. And Rocket Mortgage hasn't done great recently, even with the rate cut. Sort of rolled over a little bit. Now, you could say the rate cuts were baked in anyway. This is a lot of selling. I mean, this is actually an indication of some news. Yeah. There's definitely some news. Oh, yeah, there's this lawsuit I forgot about. They basically, one company paid another one to stop advertising. And the argument is that wasn't totally above the board. Leaves renters and property owners with fewer choices for finding and listing apartments. That's not good because people really hate landlords already. So if they're going to start hating a company that sort of represents landlords, that's definitely going to have a issue, negative effect on the share price. Lending Club moving down some as well. And then sort of in the conversation is Upstart, which does do lending. And Affirm does buy now, pay later. So that's, I don't know how related that move down is. Fintech is definitely hurting right now, though, even as the technologically enabled banks are doing great. IBKR is up. JP Morgan's not great. Morgan Stanley's not great. The actual banks are Citigroup, not great. So Better is definitely a meme stock. Opendoor is definitely a meme stock at this point. Think like, GME back in 2020 over here. And I guess that was actually in 2021. Man, time flies. AMC as well. Followed GME. So it's kind of like the money flowing out of GME. This was September, first week of February. And then AMC hit in May. But you see, this was pretty much the same week. That's what we're seeing with Opendoor and Better. I'm almost positive that's what's happening. They're linked. And now you have to say, they're definitely linked. Some big player could be messing around too that you just never know about. There's a pretty clear level here, and it's kind of a speculative buy where the lending companies, and when I'm saying lending companies, I'm talking about the technologically enabled ones. Rocket Mortgage is definitely one of them. Upstart. The technology companies who do lending are not doing so hot. So all you can really look at is Better, and you can look at Open. If Open really craters here, I don't think that's going to be good for Better, even though Better did go up when the money flowed out of Opendoor. I think you kind of need both of these to stay exciting for people to stay excited about a stock that just went up from $15 to $60, and just, you know, on a few days, in one day really tripled, pulled back a lot, but tripled. So that's the play. I guess BLND is another one. It's not one that I'm as familiar with. I don't think it's as widely talked about. That looks terrible. It's a penny stock. I would not focus on that one at all. That's the idea. I gave some price levels and some similar tickers. If you like these ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. Give it a shot. You just automatically get popped in there, and every day you get the best idea. You can ask questions at any time as well. I just am caveating that if you're expecting like a party, it's not a party in there. If you're expecting a bunch of news bots, like, oh, OpenAI just, you know, has a new client of some data center company, and the data center company is up, you know, 0.5%. It's like, that's not what this is. There are a lot of news shows. There's CNBC, Bloomberg that do that. That's not what this is. So if that's interesting to you, intriguing, give it a shot. $25, 7 days. And if you haven't subscribed yet, hit that subscribe button. If you like the video, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into some Felix to close it off.
If you own US stocks, what I'm about to reveal can either make you a fortune or cost you thousands. And it all comes down to a trade war most Americans don't even know it's happening. Just months ago, the US slapped a crushing 50% tariff on Indian goods, doubling down on what could be the biggest trade reshuffling since the China trade. And we're talking about a $132 billion in annual trade between the world's two largest democracies, and Wall Street insiders are already positioning themselves to profit from the chaos. By the end of this video, you know exactly which US stocks are set to benefit from this massive trade shift, and how regular investors like you and me can get in before the big money catches on. My name is Felix Breen. I'm an ex-investment banker who's seen how Wall Street really works. I'm also the founder of Goat Academy, where we have over 20,000 students, and I'm the co-founder of TradeVision.io, where we give regular investors like you and me the kind of data access and news access
I need to give you the screen.
Wall Street's elite. And I've dedicated my retirement to teaching regular investors how to beat Wall Street at their own game. Today, I'm going to expose a trade war that's creating a massive opportunity for US companies, opportunities that most retail investors are completely missing. And here's why this matters. India sells to the US $86 billion of goods a year. The US sells the other way $45 billion. Pretty significant sums. And it's also a $41 billion trade surplus, which is why Trump is not very happy about them. So the US has slapped a 50% tariff, which is essentially a tax on Indian goods. Covers most goods. But there are some exemptions. Pharma, semiconductors are exempt. So why does this matter? Because it isn't just about trade. It's about supply chain disruption. And disruption creates opportunity for smart US investors. And if you want to really learn the rules that Wall Street uses to find winning stocks, I could put it in this video, but it would add an hour to it, and most people are probably not up for that. But serious investors who are up for learning that can join me at felixfriends.org/get-free and literally spend 15 minutes watching what the 3 steps are to find those winning stocks. It's the protocol that I learned from my mentors on Wall Street. But let's look into the real opportunities here. India supplies 40% of all the generic drugs that Americans are popping like candy every single day. So who's a winner here? Always think about winners and losers in terms of money. From this exemption, who benefits? Well, CVS. They're a massive generic drug distributor. You got WBA, which is Walgreens, that benefit from cheaper generic supply chain. There are other stocks you might not have heard of. There is MCK, McKesson they're called. They're a drug distribution giant. There is Cardinal Health, another distribution play. So the second story to us is the US pharma supply chain. US pharma companies get cheaper inputs from India, which means they make higher margins on the generic drugs because they can take advantage of the low manufacturing costs in India, and that's now uninterrupted. So other sectors are facing headwinds, but pharma is suddenly looking nice and recession-proof. And on top of that, you got an aging US population that's, as I say, popping drugs like they're candy. But there is another sector that's also set to benefit from this, and it is called defense and aerospace. There is a 10-year US-India defense framework that was just signed. They're going to do joint military exercises. There's an initiative for defense innovation. And who's the winner here? Well, it's US defense contractors. You're going to sell US defense goods to India to reduce that trade deficit. So who have we got here? Let me give you a couple of potential winners here. These are not some financial advice. I'm telling you to run out and buy it. I'm telling you to use this as the beginning of your research. There is Lockheed Martin, ticker symbol LMT. There is an F-16 production partnership. There is Boeing, ticker symbol BA. Think Apache helicopter deals, think commercial aircraft. There is ticker symbol RTX, that's Raytheon. Think missile systems and radio technology. And then there is General Dynamics, ticker symbol GD. Think naval systems and submarines. The opportunity is huge because India spends 13% more on defense every year than the year before.
Okay, when you guys are talking about how
forcing India,
I don't talk loud, I can definitely understand what you're talking about. Felix does not talk loud. And if I'm quieter than him, yeah, that would put me to sleep too. So let's jump into Lemonade. All right. There's the chart. Here is some info about it. Okay. Let's jump into a little breakdown here if you are on YouTube. Not exactly sure what that noise was, but I can see your comments on YouTube. And let's get cooking here. Excuse me. There's one stock that is about to skyrocket, in my opinion. It is an insurance technology stock. So insurance is a evergreen massive market. Think Warren Buffett buying Geico has a cash float machine where it just spits off cash every year from unpaid premiums. And technology is always a great place to be in, even though software stocks are at risk of getting eaten by AI. So let's jump into the ticker. It's LMND, Lemonade. insurance and talk about the company, what they do, and look at what the actual buyers and sellers are doing, aka the chart. If you like these videos, hit that like button and let's get going.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So let's get into some info about this company. I am trying to project my voice. I feel like I'm talking like a frat boy, frat guy, but maybe this is just what actually talking is for me. So let me know in the comments how we're doing volume wise. Here's the company. They have some risks, okay? Essentially what they do is they're a marketing company. So you see their ad on like Meta or Instagram in particular, and they say, hey, you can save a bunch of money on your car insurance. And then you head over to lemonade.com and then they give you a call or email you some quotes. And they get a cut of what insurance provider you ultimately go with. So there's some risks, right? Because insurance is super regulated and they have to be careful. They're actually kind of similar to HIMS in that sense, where a lot of their business is actually just connecting the customer with the drug. Like HIMS has this partnership with Novo Nordisk, which actually got sort of jeopardized. Novo Nordisk was not happy with how they were reaching customers. So HIMS got cut and pretty much whatever you want to call this, 40% down drop in a day. I don't think that's going to happen to Lemonade. I don't think some big insurance company, Geico, Liberty Mutual, is going to come out and say, you know, this insurance marketing technology firm is not acting in a way that we think represents our product. It's a little different. I think HIMS had a lot of scrutiny because it was a biotech company, but it wasn't actually a biotech company. It was just reaching the customer for real big pharma and biotech companies. So I think the risk is smaller there. And it is at an important level here around that $52 level. Going back to, this is December of last year. It didn't quite reach it. Bounced off it here. Jumped up here. And then it's just having some compressed days here. It's not doing much of anything. So I do think this is a wise spot to start taking a look at it. It is a little choppy here, to be honest. It would be great if it built up some type of flag. This you couldn't have predicted because this is earnings, and you don't want to be buying into earnings. But if we really go back here, I mean, there are some times where there's low risk entries and you start to get a ramp. This isn't a great example either because it could be buying into what earnings is expected to be. Here's kind of what we're talking about. Of course, I'm a little bit talking about the market in general in here because the market all went up. But rising tide lifts all boats. You do sort of have a level that Lemonade reclaims here after their earnings, goes sideways, and then when they break through that, well, you have a low risk opportunity to get in. There was a tight day here, which was tough because then you have a gap down and then it goes up. But generally, we're talking about holding for a few days. This is about 5% down. So this is right on the edge of if you would hold through this. You know, me personally, probably not. But then again, I'm not sure I would be buying in here anyway. Whereas over here, you know, we are starting to get at least some days that are only, you know, a couple percent. So if those can continue, you know, this is a big day where it wicked down and then went all the way up. I don't really like to look at what happened in the middle of the day, but in this case, we can take a look at it. Like, if you are taking a look at an intra-daily chart where you see what happens on each particular day, you might have bought up here, right? And then suddenly you're down 4 or 5%, right? If you happen to look at your phone or your computer or your laptop, whatever, wherever you see your stock portfolio, you are down 5% if you bought at the worst time and sold at the worst time, or were down at the worst time. So it's a little whipsawy. It's smoother if you have a company that is just, gosh, I cannot believe I just misspelled that 3 times, is trading just with less percent change on any particular day. So, for example, Open Door is trading 10% up and down a day. Open Door is like the GME, the GameStop of this past month. Okay, so if you have an appetite for that type of risk, I'm here to help you find entries on those type of companies, but I'm not here to just tell you about those companies all the time. So, here's an example of a company that is a little bit safer and kind of closer to what I've been talking about, that's sort of similar in chart to the company we're looking at right now, which is Lemonade. So here's what I'm talking about, where, yeah, there are some big up and down days, but when you start to see some really compressed days, I mean, it barely moved at all. And then if we do look at the intraday, which you can, but again, you don't have to. I tried to do it as little as possible. You can see that there are some days where, during the entire day, it really basically barely moved. I mean, this is 2%, depending on where you got in. Maybe it was only down, a percent or so at any point, which is great, because if you're taking a position on the daily chart, or even the weekly chart, or even the monthly chart, although I don't really recommend you do this, and you only check your phone the next month, there are times where you could be down a lot, okay? But if you're being responsible with your position sizing, you're taking 10% positions on any particular week, you're really unlikely to be down more than 10% on that 10% position, which is 1% of your full portfolio. So if you have $500K portfolio, you'd be down $5,000. These are worst case scenarios. So all that to say, looking back at Lemonade, I do think it's sort of reasonable to look at a 1-day chart, unless you're, Warren Buffett's grandson or something, and you've got a few $100 million that you're trying to put to work. Just daily chart is okay to look at. And if not the chart, then checking your phone every few days, every other day at least. So all that to say, this thing is shaping up, but I would like some tighter days like this one. That's all I'm trying to say. Now, that's the level, $52. As always, pretty much always, I think most if almost all these ideas have been, you risk a couple bucks, you risk a couple percent or more, and then you try to make $10 more, or 10% or more, but really you sell half, 10% up, you hold some more, and then maybe it goes sideways for a couple weeks or longer, and then maybe eventually you get another 10%, and maybe you use one of these lines, like this red line is good, but this dark red line, this 20-day moving average, which I have recently talked about, is on Robinhood. So if you log into Robinhood and you go to Robinhood Legend, and I'm not going to be able to log in because my phone battery just died, and I need to do two-factor authentication to log in, but it looks like I'm already logged in. So these lines do come by default on your Robinhood. Like this line is the purple one here, and this line, this blue one, this is what I'm talking about. Where if we type in Lemonade, for example, which is the stock we're talking about here, if you can jump into this, This is just 2025 over here. I think we can just look at 2025. That should be all right. You can sort of see how if you get in at some point, you know, maybe you're down a couple dollars a share, a couple percent or whatever, 5% at max. And then let's just say 3%, saying you're down 5% on the stock is, and still holding sort of just makes me uneasy. I don't like that. So say you're down a few percent, you got in on one of these days, whatever. You sell half when you're 10% up, 10% of Ethereum stock is $3. That's not much, right? And then you hold half and just sort of say, I'm just going to let it ride, okay? And maybe you get here and you see this blue line. This is the 20-day moving average. You see it sort of touch that line. You happen to be, you know, you looked at your phone once every few days or whatever. You saw that your lemonade position is down from where it was. It's not down from your entry. You know, you can see your cost basis where you initially bought it to. You're still up on your cost basis, but you're like, this is starting to go down. Well, maybe you take a look at your Robinhood app or your Robinhood, whatever you call this, your web app, and or your Thinkorswim or your whatever charting you got going on, Webull. It doesn't matter. I'm just using some different examples so everyone feels comfortable with what we got going on here, which is we got candles, you know, green and red. Green is up. And then you got volume, which is how much people are buying. Red is, these volume bars are red when people sell. They're green when the candle is green, when it closed higher than it opened. And then you got these lines, which are just averages of the price, which are helpful. So you don't have to like agonize over, oh, is there some news about Geico that could affect lemonade? It's like, make all those decisions when you buy it. And then, sure, if you want to buy more at some point, buy more. Some news comes out that makes the stock move in a way that you think lemonade could be the next Geico. I'm not here to tell you how to make your investment decisions. Fine, buy more, but treat that as a separate investment from your initial investment. So you made an investment here or wherever, you went down a few percent, let's say, and you held it, or you went down 1% and you held it. It's okay to get chopped out a lot, to lose like 70% of your buys and only hold 30% of them because you just immediately cut them all at like 1% down or even less, 0.5%, you know, if you're super risk averse. That's fine. But the 30% that you hold, going back to this example, you sold half. When you're 10% up, you're holding half. And then you sell, or you see this day, right? On your Robinhood app or on your web app. It touches this line and you're like on the fence, which is totally reasonable. So maybe you sell out that day because you think it could go down more. Fine. You still made some money on that second half as well as the first half. But if you hold, you know, maybe you wait until it touches again, it touches it up here. So now you get another chance to be like, oh, I'm going to hold again. You know, I know this thing's going up. It's like, well, this time you were wrong and it goes below it. Now you sell out. You're still up from the first time it touched and you make some money. So all this to say, that's sort of an example of how to do some of this investing. I don't really want to talk about the revenues of this company that much anyway. This video is already long as well. Hopefully the volume of my voice is going up. I'm working on that. And I guess I'm also talking a little bit like a baseball player or something. It's hard to get too serious about discounted cash flow and financial metrics for a company that's essentially a insurance web startup, right? I mean, it's trading a lot of momentum. It does do all these different types of insurance. I mentioned car insurance, but these are actually, none of these are car insurance, just to say how little they're expanding into car insurance, know about this company. Oscar is doing well as well, OSCR, and Root as well. And look, I mean, they have some news. They're expanding into car insurance. This is a massive market, by the way, car insurance marketing. I mean, you know that if you've turned on your radio or your Spotify app or whatever. So we'll see what happens. There are details. Reinsurance decrease in its quota. So Anything that makes them more stable is good. If we were super into insurance tech, private equity, or venture capital, we would be all over this, okay, underwriting improvement. But right now we see a chart, we found some levels, we talked about the math of staying in a position. And if you like these sort of videos, hit that like button. If you want to talk about your ideas or just see like the best idea on a given day instead of like 8 videos that some of them come out later because I can't just put them out all at the same time because then YouTube gets confused. People get confused as well. Head over to stockscommunity.com, try it out for $25 for 7 days and see if it's for you. You can watch, at this point, there are hours of training, scanning at looking through hundreds of stocks to find the best ones, as well as sort of like I just walked through with that Robinhood example, how to stop out, sell, or how to hold half your position or a third or whatever for some extra gains. So if you haven't hit that subscribe button, hit that subscribe. And if you like the video, like it. I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.